Oh, and welcome! So we have some crazy news. Obviously, CPI went mental yesterday. Came in massively below expectations as well. Not even like I thought it would come in around about expectations, slightly lower. And I think as the days kind of progressed, we were a little bit excited. But no one expected how far it would come in under expectations. So it's all been pretty crazy, to be honest. And we're kind of opening up the day on, I think, 7% up on Nasdaq, 5% up on the S&P, but crypto is not really up that much. We're still not seeing too much going on in terms of the overall kind of crypto world, but we are seeing stable coins take a massive hit because of the SBF and the CZ big fight that we're seeing. It's Binance versus FTX, and the saga continues, boys, girls, and everything in between. Here, let's have a quick look at, I'm just looking at this. Let me play this. SEC Pro. Okay. I paused it. It didn't really work. Anyway, so as I was mentioning here, core inflation 6.3. This is very, very good news for the Fed. The Fed, as a result, have come out and they said, actually, you know what? We're going to slow rate hikes. Okay. So we're now going to be expecting a 50 basis point hike, maybe even less. But they said, look, to be honest, we are still very, very high. Remember, their target is 2%. It's not 3%. Their target is 2%. We're still at 6.2. No, well, we're at 6.3. We're at 6.3. And bear in mind, I'm only looking at the core because this is what the Fed looks at, as opposed to CPI, because obviously that includes food and fuel, which are just too volatile for the Fed to try and, should we say, control or anticipate. It's much harder to try and anticipate because you have external factors such as the war in Russia and Ukraine that take a massive, massive impact upon the food and the fuel. They're responsible for 12% of the world's calories and an awful lot of energy, because obviously Russia is mad big and it's just got loads of energy, loads of natural gas, etc. So just bringing this up over to here, we are currently sitting at a 4% rate. So that's the higher rate here. The chances of a 75 basis point hike here, obviously we can see, are now only 19.4%, 80% looking at a 50. There's not really too much talk at the moment of a 25 basis point. I think this will depend on the next CPI and the next jobs report, because bear in mind, we don't get a conversation from the Fed until the 14th of December, which is like over a month away. And within that time, the first week of December, we get our jobs report. And then after that, I believe it's the week after, just prior to the December the 14th, we then get the CPI report. So we are going to have these which will take an impact, but I'm thinking it's probably going to be this. And a couple different Fed officials have come out and essentially just said, like, okay, we are going to slow down. It seems like we can, but we're not near the Fed fund terminal rate. And the terminal rate is not the rate that's going to stay forever. It's just the rate at which they'll stop making rate hikes. And then let's just have a look into March. Let's just skip February. So we're looking to stick at around about 5%. If we're at that level, let's have a look down to maybe July. Again, around 5%. So it looks like the Fed fund rate, the terminal rate, should be about 5%. And then I imagine towards the end of the year, we'll begin tapering that off. So, okay, oh, no, this actually means increasing. This is weird. I mean, depending on how the quantitative tightening goes, I think that's something that not a lot of people talk about. But apparently, towards the end of the year, we're looking at actually a couple more rate hikes, which is a bit strange, actually. But obviously, it's just going to depend on what the Fed want to do. Joe, just moving on quickly, having a look. Like I mentioned, S&P is up by 5%, well, 5.5%, and then Nasdaq is up by 7%. We also have the Hang Seng up by 7.5%, which is the Hong Kong stock exchange, basically. And now, what's that mean for crypto? We are seeing a bit of a pump because of the great news that we had from the Fed. And another issue I want to talk about is that we do have stable coins de-pegging, which is really not a very good story, but we'll come into that later. USDC is, in fact, that hasn't really been too badly affected. You see this is actually spiked up, same as Binance, as opposed to Tether and USDD, which is Tron stablecoin, which have actually spiked to the downside. Now, Solana, I just want to quickly mention this. We are up by almost 10%, really, which is fantastic. But this, I believe, is because of this piece of news. If you are interested in Solana, this is going to be very important to you. I put something out on Twitter, which is, it's kind of like riding a train, okay? So when you stake Solana on the Solana blockchain, you then have to stay there, okay? You're at a station, you stake your coins. you can't get on and off the train while it's moving. So you have to wait until the next station. So every 2 days, Solana has one of these stations, which is basically an epoch. And it just means you can either get on or you can get off of staking your coins on Solana. So, as you see, by design, Solana was supposed to unlock about 18 million tokens between November 9th and 10th. However, due to FTX ecosystem collapse, Solana has postponed the unlock date until the 12th, so as to reduce the sale pressure on Solana's struggling token, which is, I mean, look, you could call that price manipulation, you could call it whatever you want, but they're not regulated, unfortunately. And this is something that I think we will see more of, because if a company was just to say, look, we've had a bad quarter, let's not release our earnings for the past quarter, everyone would be like, whoa, hang on, like that's you can't do that. That's just not allowed. So this is one thing, obviously Solana have made a very, very smart move here because they are up by 10% on the day almost. And so I think now people will restore a bit of faith in the Solana blockchain. And they are absolutely right for themselves. They've made the best choice, but whether it's actually ethical or not is another question. I do want to jump on now. I'm just going to show you this USDD. As we know, this is Tron's stablecoins. This is based against USDC. Or USD coin, which, as we know, is run by Circle, but lots of volatility. Lots of volatility. I will say, we all know it's an algorithmic stablecoin, so whether that has something to do with it, we don't know. And also, I want to show you USDT against the dollar, and we can see this had a bit of trouble as well, like quite a lot of trouble actually. And this was yesterday. We've seen this is a 4-hour chart, so only what was that, like 12 hours ago, something like this. So yeah, we're looking at like a lot of uncertainty, still not quite at that peg. We're at 0.997, which is not bad. It is pretty much parity, but I feel as though there's a lot of fallout from this FTX disaster. Now, Sam Bankman-Fried, he said, look, when he was going all around Silicon Valley, he said, look, guys, I need 6 billion to cover my debts. And then it went up to 8 billion as like the whole in his debts. And obviously, we know Binance pulled out. But now FTX are reaching out to Kraken for help as it scrambles for 9.4 billion. So it keeps incrementally going up. But Alameda owes FTX 10 billion. So Alameda, like, why don't you just pay us back? Well, actually, Sam Bankman-Fried is like, well, I own that as well. So, I mean, like, I could crash Alameda, maybe to save out FTX. But does Alameda have the money? Can it cash in its investments? Those are the questions. And I think overall, the answer is no. So that's not looking very good at all. So after Binance walked away from FTX, the cryptocurrency exchange has turned to Kraken for a possible bailout, citing two people familiar with the development. The latest developments in animates. I think I might be dyslexic, guys. This is absolutely unbelievable. The latest developments emanates after FTX CEO Sam Bankman-Fried said he's working on emergency moves to raise funds. I mean, like, if you were to raise funds for him, what's the percentage return you get on that? Because if that's not high risk, I don't know what is. That's like jumping into, it's worse than private equity. I mean, we know that's where you get like the most returns. It's like when you invest before it goes public. And so, Justin Sun, like I said the other day, Justin Sun is our hero. He's now to the rescue. But because what Justin Sun has done, and I feel like there might be where did I, yes, here. So what Justin Sun has done, and this is explained in more detail, but he's basically allowed like FTX and some of his own ecosystem coins to be actively traded. Okay, so you can take money essentially away from FTX by trading into Tron-based tokens. And so doing this meant everyone who has money with FTX or in FTT, for example, is like, okay, well, I have to get out of FTX. What's the only ecosystem that I can transfer with? Because you can't take your money out of FTX because everything's locked. Transfers are locked. You can't withdraw money. But you can transfer into Tron and then from Tron into other things. And so this is why Tron-based tokens are selling at a 1,200% premium. It's absolutely insane. Okay, so some of the BitTorrent and JST and the Sun token are trading on the exchange at premiums ranging from 525 when you're trading, and that's the beginning, from from 500% up to 1,200% compared with market price. It just shows this, and this is the type of thing that I think causes one of these massive contagion type of events. I do think we will begin to see certain hedge funds, certain exchanges, just certain projects all begin to go bust because so many people put so much trust in the likes of FTX, which really isn't going well. But the overview is that this means FTX customers get pennies on the dollar while Tron makes a ton of money, and Tron will be will be bid up on FTX as this is the only way to get out. But once people withdraw it, they'll have to sell it at market price, taking a huge loss on their original holdings. Not great. But bear in mind here where it says Tron makes a ton of money. Who was the one who came and said, "Oh, Mr. FTX, I'll come and bail you out"? It was our favorite man, Justin Sun. Okay, because he said we're working on a plan, right? Working on a plan to boost or to buy, I should say, buy FTX. But what he's done is made himself super rich. So now he might be able to buy FTX. Very smart move, okay. But as we all know how an algorithmic stablecoin works, the price of the stablecoin will be affected depending on how much is redeemed and not redeemed, etc. So because we have so much high volume, we now see USDD depegging, which is what I showed you earlier on here, but this is USDT, it was USDD. And so we're basically looking at that depegging and causing Tron a bit of troubles, but I think they're making enough money so that it doesn't really matter too much. But experts have alleged that Sam Bankman-Fried's Alameda Research attempted to depeg USDT, the Tether, as payback for rival Binance, which holds nearly $18 billion of it. Experts on crypto Twitter speculate that the USDT depeg, the drop of 0.3 cents, not very much, but still a depeg on a stable coin, was triggered by a slew of liquidations by Alameda Research, followed by the news that Justin Sun, the founder of Tron, stepped in to bail FTX out to re-establish USDD's $1 parity. And I'll just scroll down here. On-chain analysis are now watching, or analysts are now watching every move made by Sam Bankman-Fried's Alameda Research. Hasaka identified an on-chain transaction in which Alameda shorted USDT in 3 steps. The trading fund is supplying USDC on Aave, borrowing Tether and swapping it back to USDC on Curve, essentially shorting USDT, which I think is what caused this massive spike that we see to the downside. And then obviously this, like I said, this is a 4-hour chart. We could zoom in, we can find exactly when it happens, what happens. But these little increments here, I believe, are massive selling pressure. And you have to have a lot of selling pressure because it's got a ginormous market cap. Yes, Alameda, I think they only did 250,000, but that was enough to spark a bit of fear. Just so you know, though, this is this is Binance disclosed their exchange balances. So this is Binance's balances of, and you can see USDC 600 mil, BUSD 21, USDT nearly 18, nearly 5 mil for ETH, nearly 58 for BNB, and nearly 500,000 for Bitcoin, which is still a lot of money. They got a lot of money. I think, and this is one thing. Like, is Binance too big to fail? I don't know. Are they good enough to take over FTX? Probably. That's personally my thought. Will they survive this? Unless they're mad leveraged, probably. Anyway, Justin Sun speculated that USDD depeg is the result of Alameda Research offloading in large volumes. The USDD price is crumbling under selling pressure. So they believe it's because of Alameda Research. And so just to finish off here, FTX announcement regarding the Tron credit facility. We're pleased to announce that we've reached an agreement. Yeah, but mate, have you seen, what was it, 1,200 or something? It's absolutely insane. At 1,200%, it's crazy. One green bit of news, though. 2 US senators say the downfall of FTX clearly exemplified the need for greater federal oversight. This is not good. What is good, though, is here. If the DCCPA passes into law, it would grant the commodity, not the SEC, the Commodity Future Trading Commission. And these guys also came out and they said, look, Bitcoin, Ethereum, crypto, it's a commodity. It's not a security. See you later, Gary Gensler. That's everything from me. I'll have a quick look. Hello to everybody. If you have any questions, drop them in the old box, the old boxy down below. Like the video if you did enjoy this, and I will see you later on. Thank you for watching.